Hello, guys and gals. Just doing a video real quick here, and haven't done one for quite a while, but things are going to be quite precarious this week. Real quick, I'm going to switch over here to my Slack. Real quick, we have an earnings bonanza this week on all kinds of earnings hitting the tape. Unreal. I have never seen one week loaded so tight for earnings in my life, and all hitting this week. And some of the marquee names are all hitting here all the same week. It is going to be unreal. The news hitting the market. And on top of that, the Federal Reserve's coming out and having to speak on top of everything else. So, man, it's going to be a rough week. So basically, what I'm looking at here on the S&Ps, and I try not to read too much into trend lines, but what I'm seeing here, I connected these two levels right here on the S&Ps, and if you zoom in here, this is a daily chart. If you notice, we've dojied out right off that trend line as of Friday on the S&Ps, which should act. This was a support a yearly support area, so it should act as a support area going into next week. So uh, it didn't give me a breakdown signal, so I didn't want to take swing shorts in the overnight, considering that's a yearly support a yearly support level uh, for the weekend session. So basically, I just want to keep a close eye on this, but basically, we are pushing out via time and price to possibly break this uptrend, which we started back. It could make the uptrend more precarious going forward here on the SPY, especially knowing we're finally going to get the news. And so far this quarter earnings season, they have even the stocks they popped up, they're selling the very next day. So they are they're actively taking profits there. And we saw Thursday. If you go down in a time frame here, so I'll just go on a 5 minute here so you can see what you're saying. Seeing right here in this area right here, they absolutely no buyers showed up to participate. Those were single print sell offs as of Friday. So something to definitely keep in mind. If we start getting back up there, of course, it can fly through there pretty quick. But we have to get back up there. And here's what I'm seeing, on the SPY. See how we came up during the day, and I was calling it out in the room, trading with Joe's trading room, how this thing was probably going to be coming back in, especially I actually mentioned on the Qs actually, but it was looking very ugly there. Friday, possibly we could have been breaking down Friday even, but you see where we closed at on that trading line, on the shorter time frames here. So definitely something we are on thin ice here. I do think this is potential support area, most toad area that we stopped at Friday. So I can't wait to see the opening print Monday to see where prices are going. And with the dollar collapsing, and I am of the belief that the dollar collapses, a lot of foreign investors are going to have to pull out of the U.S. equities. So that's where the way I'm looking at U.S. equities. I know a lot of people are thinking the dollar goes down, U.S. equities are going to soar, and I'm in the other camp that the foreign investors are going to pull more money out of U.S. equities as the dollar erodes. So, just some things I'm looking at here. And then another thing I was looking at here on the Qs, a similar situation here. We had our capitulation sell off, and then we just had that real nice tight uptrend. And what we did here Friday, we gapped below that uptrend, gap away from that trend. So keep that in mind. The entire candle has broken away from that trend line as of Friday. And then on a secondary note, if I switch over here to my other charts, and I can give you a quicker on a shorter time frame here, 5 minutes. What happened Thursday? We had another capitulation sell off, It wasn't nearly as clear as on the S&Ps. They were trying to defend it on the way down, but we have another smaller area, a single print. They were just capitulating. And what really bothers me on the weekly standpoint on the S&Ps, typically what you're or on the Qs, typically what you see uh, when you come down to the VPOC, that VPOC gets defended, and basically that is the area they capitulated. They completely threw in the towel at what should have been the highest volume to do business for the week, and instead of defending price, they completely capitulated right through that volume point of control. So that I found that out this weekend. I didn't even see it last week, and that is a major, major red flag for me. Seeing that type of capitulation, basically there was nobody there willing to defend this uh, volume point of control on the way down, and that is a major, major red flag for me going forward into this week. So something definitely to keep on watch here. The Qs are looking very dangerous, very, very dangerous going into this week, in my opinion. Okay. Okay. On the IWM, another thing I'm looking at here, basically we poked above this trend line, and as of Friday, we're back testing this trend line as of Friday. We came up and now we're coming back into that trend line, potentially breaking back down lower. So keep that in mind. Right here, right now, we're still have a bull flag continuation pattern, but it's something to definitely keep on watch going forward here. And we did break below our secondary uptrend line from the March lows. And this one here is a much more bearish scenario. Both on the SPY and the Qs, I wasn't coming off the dead bottom. I mean, IWM is actually, this trend line is off the dead bottom from March on that trend line. So, we are via time uh, possibly moving away from this primary uptrend, okay, on IWM. So this, to me, is actually acting much more weak than the other indices going forward, and rightfully so, because so many mom and pops and stuff are small caps and mid caps are weighted in the Russell. So it makes sense that this one here would not perform as well as the other sectors. And just food for thought, we had our local county, 300 new reported cases of coronavirus. The county next to us, 200 new reported cases. Um, and my brother works with a woman that works in the local armory, and she's been put on alert. They're actually preparing for potentially shutting the government down again for an indefinite time. So, and they're talking about a much deeper shutdown than what they had last time. So that's the rumor going around. So right now, so just keep that in mind that it is looking really bad on this outbreak. It's far worse than when we shut down last time, and so expect if they shut it down, we're probably looking for a sustained period longer than last time. So that's really, really bad for the markets if that were to happen. So just keep that in mind going forward. Um, because they do have managed to come up with some better treatments for the virus. I don't think they're to that point yet, but it's something to keep on the back burner that could happen. Secondary note, because this massive run up in the Qs, this is an untested VPOC from June. Yeah, just last month. So just keep that in mind. I mean, this actually developed out in May. Okay, but this is you know, this has been untested. This VPOC. So keep that in mind. That takes you to 230, basically the 230 area, 229.60 area. Uh, Typically, those are gravity points for price. So if this thing does start to break down, that is a significant haircut. That is basically even going below the prior swing highs. So keep that in mind going forward here on the Qs if this thing really does start to fall apart. Um, I got people on the bullish side because they're using the Elliott wave theory, and the Elliott wave theory is telling us that the market they're expecting the markets to go higher based on that theory. And for me, we got millions of brand new traders in the markets, and they have literally never been through. This is the first earnings season they've ever traded through. So uh, I see all kinds of problems here, and the fact that the Qs blew right through that weekly VPOC Thursday and didn't even hesitate, I'm gravely concerned of how uh, whenever these mom and pops realize that they can't, the bid and ask are going to have trouble on a panic situation, right? You know, you're not going to be able to get rid of your options. Period. You know, there's not going to be any buyers there on these options or these derivatives. And you know, if these mom and pops, if they're doing the stocks, you know, of course you can get a little bit better liquidity, but they've never been in a liquidity squeeze uh, to the downside, and so it's a grave concern of mine going forward into this quarter. Some things of note: the past few days, they've been using AMD to drive price in the Qs, and you know we had this big sell off, but AMD kept getting a bid, and I think they've actually achieved their target, the $70 range, right up here on this Venom line. It was also corresponded with this very aggressive fib fan. And I do think because what happened was into the close, I did see notable put buying into the close Friday on AMD. So that's going to be really interesting Monday to see if those buyers of the puts actually got it right and on AMD going into the first of the week. So I'm really looking forward to seeing if sometimes that doesn't work out, but there was notable put buying, in my opinion, into the close for AMD, and so definitely see. You know, we got to that $70 range, and as you didn't have any major volume coming into the close. So you know, for several days now, we saw them accumulating, and I do think they finally reached their target for AMD, in my opinion, going into earnings, and we're probably not going to see much higher at all. I will be keeping a eye on bowling this week. On a daily standpoint, the Elliott wave, in my opinion, you got your 1, 2, 3. You're consolidating for a 4 for a potential breakout for a fifth wave. I was hoping to get that this past week into earnings, but it died out. So I'm thinking, at least right now, the count suggests Boeing wants higher until proven otherwise. So I'm keeping a close eye on Boeing and making sure that we don't break this candle on the 611. If that breaks, 611 candle breaks, that'd be a low of 166. 166. Then, of course, the count's wrong, and we're gonna have a bearish leg lower. So this one, it was very active last week. I traded it a couple times, made some profit. So that's one I wanted to bring up. Apple on my watch list. If the Qs are going to hold, they're probably going to use Apple into earnings to do it. I saw the Qs potentially bouncing off of a yearly support area. I know that's hard to believe that we got yearly support areas, but I got Venom lines that draw out yearly levels, and we blew through one level, and now the second level is acting as support. So that's so. But anyway, that's on the Qs. But basically, I'm keeping a close eye on Apple because, like I said, the uptrend is broken technically. So and we're below our 20 SMA. So you know it is a broken pattern technically. So this is definitely my most important tech stock that I'm going to be watching going into this week. So I definitely want to keep this one on watch. And if you go in the lower time frames here, they were accumulating for a potential buy the dip scenario going into the first of the week. The volume point of control was near the day high, so they were trying to accumulate Apple start going into the start of next week, possibly driving Apple up into earnings. So definitely something to keep on watch. Okay, another thing, Friday morning, I was calling out a change of tone in Microsoft. This is really one of the first day, Friday, that Microsoft found any type of buying, in my opinion, since the earnings. I mean, we had our earnings and it just caved in, and they found potentially found a short term bottom here for Microsoft. If you go on a longer time frame, that thing is a beast, just like everything else. And basically, they had pretty good earnings and everything. It's just the valuations have gone up so much since last quarter. So definitely something to keep on watch. If the markets roll over, of course, it's going to get punished, with the rest of the markets. So, um, I got this primary trend line right here. It is, it has clearly broken down from the primary uptrend, along with everything else. So definitely something to keep on watch. Another one, Nvidia, which is another one really overpriced here. I'm keeping her on watch here for a potential continuation higher. The Elliott wave theory suggests it's in a bullish pattern, and the pattern is still intact. They're using it to keep the Nasdaq up. So as long as the semis keep a bid, Nvidia will probably continue to go higher. Like I said, AMD seems to have hit where they want it before earnings, and we'll see what happens after that. Tesla, oh, it's a beast. Came down to the 20-day moving average and virtually to the penny and found support, and buyers stepped in for Tesla Friday. The options were so darn expensive. I was suggesting to traders to sell credit spreads on the open, call credit spreads, and they would have worked out real well if anybody would have taken them. And basically, I had never seen the implied volatilities that jacked up on Tesla ever in my life. But basically, you look last earnings season, we were down $800. We're trading, basically 80% higher than that right now. If the markets come in, of course, it's going to come in with the markets. So we'll see what happens here going forward. I think the valuation is nuts. So what can I say? Basically, everything is overpriced. Everybody knows it. We're in a bubble, and retail traders keep, they're buying into this stuff before the earnings, not fully understanding what can happen here. So we'll see what happens this week. I will probably be doing my normal thing, day trading. Come into Joe's room there, and see what you can learn. Thanks a lot, and I will. If you need to get hold of me or something, just leave some messages below on the video, and like the video if you like it, and please leave positive comments. Thanks.